Hi again everyone, I hope you're all doing really well. This video is an update on Exela Technologies, ticker symbol XELA or Exela, which was requested by video. On that note, if you want me to revisit a stock or potentially look at a new one, drop a ticker symbol in the comments and I'll see what I can do. Anyway, it has been about 2 weeks since my last update on Exela Technologies, and I suppose being the start of the year, there has not been a whole lot happening for the stock. The company has had a few headlines recently. Also, interestingly, among these, Exela was actually one of the highest traded stocks last week. So in this video, I will take a bit of a look at some of the things that are going on with Exela Technologies and give my thoughts on where the stock may be headed. So let's get straight into it. Firstly, jumping into the charts, Exela has continued its slow descent, finishing last week at around the 50-cent mark, or 51 cents per share, which painfully for shareholders is actually a 52-week low. This poor sentiment towards the stock is quite clear, with the RSI regularly in oversold territory at below 30 and very much struggling to get back into a more neutral score. We can also see that this is a trend that Exela has experienced for quite some time, which goes back to around mid-December, or about the time where that company was actually forced to have to delay their annual shareholder meeting. What I find interesting is that the stock has not touched the top limit of the Bollinger Band since before Christmas, back when the stock was still trading above the $1 mark, a further sign of the low sentiment towards one of last year's hot meme stocks. In the opening to this video, I mentioned that Exela was amongst the heaviest traded stocks last week, and you can see that it was a week that was generally higher than normal periods of trade for the stock, not just for the year. The trading action was accentuated by these 2 hours particularly, which line up with an opening and a closing hour on the day of one of the headlines that we will soon be looking at. However, despite this increased action, the stock did continue to slide down. So that moves me to the next question of what may have been behind this increase in trading action. Well, the first of the headlines, which does align with the big column that we were looking at just then in the volume, really isn't a headline that should move the needle much, but it was another positive story for the company. Basically, Exela is expanding a relationship with an existing client, a big client being Mastercard, but I feel it is a case where the headline reads larger than what the story actually is. Like I said before, the deal was with Mastercard, but it was specific to operations in Norway. So it's not a European-wide deal as the headline may have you believe. Therefore, while it is a positive story for the company, it does not necessarily reflect the gravity that was attached to the headline, and therefore shouldn't be something that influences the stock price too dramatically. Now that given Mastercard is a payment facility generally connected to credit card debt, this gives us a nice segue to the next headline from last week, and one that is perhaps a little more significant for Exela from a financial perspective. That is, on Friday, Exela has confirmed an expansion and an extension to the life of a debt facility for their corporate affairs with B Reilly Commercial Capital. The deal is basically an expanded debt facility where Exela will issue secured notes which can be converted to stock, and the financial cap for which those notes can be issued was raised by $40 million, going from $35 million up to $75 million. This was an announcement that has been in the works since back in December. Basically what's happening is B Reilly, a large investment bank, has taken up a $1 million equity stake in Exela and now is helping Exela clean their balance sheet. This will be done through B Reilly paying out debts for Exela in exchange for notes which can be converted into common stock. This is the vehicle which Exela is tidying up a large part of their debt problem. I did cover this issue in an earlier video, but this deal is what is predicted to give Exela a free cash flow of about $50 million in 2022. A figure which is a big change from the general cash burn the company has been experiencing of as much as $180 million as they experienced in 2020. The impact of this deal with B Reilly is, yes, it will allow the company to get back on track to being profitable again. However, as there is an issuing of capital to eliminate these debts, there is ultimately going to be a dilution effect on Exela's stock. B Reilly obviously doesn't care. They see the value in Exela and are very happy to proceed with such a large scale investment in the company. Even if the share base is diluted, Exela currently has a $4 per share average 12-month price target and is rated a strong buy from all analysts covering the stock. If Exela were to switch over to a positive equity position and achieve profitability in the coming 12 months, now that their balance sheets will have been tidied up, this could make the 51-cent share price an absolute steal if the performance is to be realized. And this is a point I have been making for quite some time on this stock. Exela is a very big company. They've just had a big debt problem, and it seems to be that they are now getting on top of that debt mountain. which will hopefully mean better things for the company in the weeks, months, and years ahead. I have said this before that I do believe that Exela is still at these low prices. However, every time I say this, the share price seems to sink still further. I'm probably cursed. I do believe that a turnaround for the stock price is coming sooner or later. The fact that a large investment bank is pumping this much capital into the business validates this view, in my opinion. As such, I have been buying and accruing more shares in Exela as the price has slid. I've decided that I'm keeping it to no more than 5% of my actively traded portfolio. So as the price has been dropping, it has given me space to add more to the portfolio. Not that any of this is advice, I'm just quite optimistic about the future for this company. And if I'm totally wrong, I'm not risking it all. Anyway, let me know your thoughts in the comments below. Is the stock price going to turn around for Exela eventually? Will the $4 price target be realized? Or will it need to be revised following the dilution being caused by B Reilly? Also, if there is another stock you would like me to cover, mention a ticker symbol in the comments and I'll see what I can do. Until next time everyone, may the markets trade in your favor. Cheers.